we've got first half profit, as I say, up 75%, and that despite rising bond yields and a sliding stock market, which one would have thought would really have put the company and its earnings under pressure. To what extent did those factors come to bear?
Yeah, they definitely did. Good afternoon, and certainly the stock exchange performance in the first half of the year, some of it anticipated, and so we took some early gains in the first quarter of the year on the stock exchange, but it has impaired the comprehensive income. Rising interest rates, yes, as well. But I think the key issue for us is that we've been trying to focus on some of our basics. We've been looking at re-engineering processes, a couple of other initiatives in the business, and I think those have certainly helped us significantly in the first half.
You've also managed to push through premium revenue growth, and that acting as support. I mean, what have been some of the challenges in actually pushing that through? First of all, where the market, the insurance space is still a fledgling one over in Kenya, and on a second note, where we've got the average Kenyan consumer still under economic pressure.
Yeah, there's no doubt that the consumer at a retail level is under pressure. We see that particularly in the CFC life business at the retail insurance level. The positive grower has been heritage insurance, the short-term business, which has seen some very strong growth in premium levels. So the institutional insurer is still seeing the value of mitigating risk in this environment.
So let's take a look at some of the strategies you're employing in terms of actually getting a product to market, because that has been a very big challenge for insurance players on that continent, where it boils down to simple education of what insurance actually is, needing to be done.
Yeah, I think the starting point is if you look at our two businesses, the short-term business, the long-term business of Heritage and CFC Life respectively. One of the key things that we started as an initiative was to consolidate the short-term, long-term businesses into those two different brands. That's certainly paid off because there's increased focus on the specific lines of business. Then we looked at the long-term insurance companies' agency force. Previously, it tended to be a bit of a numbers game, trying to deploy more agents across the country. We've in fact halved the agency force from over 600 down to just over 300 as it sits today. The productivity levels have gone up, the persistency levels have gone up, the new case count written by the agency force has gone up. So the factors around addressing specifically what the consumer wants out of that agency force has mitigated to a large extent that pressure that the consumer is definitely feeling in this marketplace.
How's that lending then to the kind of market share you're able to steal at this stage of the game, specifically within that consumer market in Kenya?
It's always difficult to measure the actual market share at a retail level, because there's a mixture of businesses that are really just portrayed across the blended of the insurance companies. Some of the insurance companies are still composites, so it's not always that easy for us to be able to, in the first 6 months of the year, be able to tell how we're doing in terms of market share. I mean, we believe that our market share has gone up in all spheres of the business. And certainly for the individual life business, it's holding its own, which is the important thing, and it's starting to improve as we bring more engagement into the quality of training and the quality of agent that we bring on board.
Of course, with this focus now on the core market, what does become key is the kind of lapse rate you're seeing, especially where you're pushing through a premium revenue growth. So run us through that and, the kind of trend you're seeing in that regard.
Yeah, if we're looking specifically at the longer term business, persistency, as the jargon is in the insurance industry, is an issue. But we've managed to see persistency go from December last year at 62% going up to 67%. And whilst that percentage increase might not necessarily be considered a massive leap, it is a significant leap in our business to retain business in the face of what in many instances consumers see as difficult times to continue to service the product. That's a combination of issues. It's one, looking at the agency force and getting them remunerated and focused on retaining business and not just writing a new business all the time. And then secondly, to be also focusing on business where, for example, an agent might have left us, to make sure that client still gets serviced. And the combination of those factors has certainly helped us to keep or push that persistency level up.
Of course, we've had CI holdings comprise Heritage Insurance and CFC Life, as you've said and highlighted earlier on, both of which were previously units of CFC Stanbic Holdings. Now that you've unbundled from that operation, what kind of muscle are you enjoying? How has it, refocused your energy, so to speak, in terms of focusing on your core business?
The unbundling and the demerger transaction, which took place in April, certainly was a key milestone for us as a business. But Liberty's resources have been deployed into the business in supporting us from a pricing point of view, from an actuarial perspective, from a new product development perspective, etc. And this is some of the stuff that we're seeing coming through. For example, we put a lot of energy into the re-engineering of processes in the back end of CFC Life, and that's starting to pay dividends in terms of cost reductions. And on the heritage side, Liberty's forte has not historically been the short-term business, so Heritage is being given a significant a lot of support in being able to make use of, for example, the distribution channels of CFC Life and other distribution channels that we've been looking at and growing. So we've been complementing the two businesses, and I think that that's probably one of the key things that has come about.